This is Greg Michalowski with the Forex Quick, taking a look at the Aussie versus U.S. dollar for FX Street. Take a look at this currency pair. This is a daily chart of the Aussie versus U.S. dollar. This blue line is a 100-day moving average. Yesterday we closed below that line for the first time since this period right here. It's actually been going sideways here as the market consolidates at the top here for that currency pair. Today, the market, or just recently, the market broke below the 200-day moving average. That comes in at 89.54. The close below the 200-day moving average at 89.54 would be the first close since going back to April of 2009. That was the last time when the market broke above the 200-day moving average at 72.36. So currently with the price trading at 89.35, it is 1,700 pips higher than it was back a year ago, well, 15 months ago, for that currency pair. And it was the last time the market, if it closes below the 54 level, it would be the last time the market was closed below that level. So this level is significant for the longer term traders. We could see further liquidation, or we should see further liquidation in the Aussie versus US dollar. We should see the price stay below that 54 level, and that will be the key for us here today. Where's the next target? 61.8% of retracement of the move up from the 2010 low, which came in at the 85.77, to the 2010 high, which came in at around 93.88. That level comes in at the 88.87, and that will be our next target on the downside. The low once again came in at 88.99 so far. If we break through that level, then really the next support levels would come in at these lows right here. I'm sorry about that. This low right here, and additional support against this low right here in that currency pair. Those levels specifically, I'm going to have to take that off, come in at the 88.56 level, and that's a little lower than that. 87.99, and this low from this day comes in at 87.57. So that will be our next target levels on the downside for the Aussie versus US dollar. Of course, the low for 2010 at 85.77 would also be a target. Is that possible? Sure, why not? Look where the Aussie versus US dollar has come. If we were to put a Fibonacci from the low of 2008 to the high, the market has moved from about a low of 60 to 90. What is it? 93, 94, and a 38.2% retracement would just bring it down to 80.86. I don't think that's necessarily going to happen, but certainly a move toward this low at 85.77, the low for 2010, is something that you should not. That could be possible, and that's all predicated, however, on the fact if the price can close below this 200-day moving average and stay below this 200-day moving average. If so, we should see further sellers, further long-term sellers in the currency pair as time goes by. This is Greg Michalowski taking a look at the Aussie versus US dollar for FX Street.